Can you guys see my screen? Perfect.
Yeah.
Okay. Yeah. So we can get started. So welcome everybody to our bi-weekly economic review, where I'm just going to, among friends, I'm just going to go through some of the data analytics and also some of the news events that's happening in the last couple of weeks, as well as always end up with a little bit of charting and a little bit of Q&A, so that you guys are kind of up to speed on different aspects of the economy. But I think that I think biweekly is good enough. I think there's a lot of news, obviously, on a day-to-day scale, but you guys are on the chat thread, right? So it doesn't, like if there's any news and events come up, you guys will most likely see it right away. But I think the analysis kind of side of things, will take some time, right? So that's why we can do these like every other week to kind of go through and read all the details and see where it goes. So last 2 weeks, a lot has happened, right? I mean, in terms of the news events, I'm going to talk about some of the riots that's going on. I know that you guys have been, I know you guys are familiar with it. I'm going to go through some of the unemployment numbers and some of the reopening opportunities in both Canada and the US. And also, there's been changes in the U.S. money supply in terms of more expansion in asset purchases by the Fed, or should I say more money printing from their side, and what they're actually buying. So that, as you know, the Fed has been, doing little purchases here and there, and lending out money. But now, the last couple of weeks, they started buying ETFs, which is actually totally, never been done before, right? Except like in Japan and whatnot. I'm gonna go through some of the corporate buybacks and where they're happening, and also I'm gonna end up talking about gold as well in terms of the lawsuits that are going on, the paper losses, and some of the banks that are suffering, and also how everybody's still buying gold and institution-wise. I'm going to go through that, and I'll end it off with a little bit of chart and let's get going. So the first thing I'm going to go through is obviously the riots, right? So I mean, I think you guys have know the backstory of it. It started off as a racial thing, and again, I don't want to go to too much of the political and the social thing. That's not really like where I want to be talking about. I just want to talk about the economic events, right? But as of right now, there's been 40 cities that have curfews, right? Anywhere from San Fran to LA to New York, and it's probably the worst weekend in recent U.S. history, which is in recent history, which is unheard of, right? So the crazy part is that it shifted. It started off as a racial issue, and now it became into something else, right? You've seen some of the looting and the violence and the complete lack of regard of people's safety, and also the small owners and the store owners and the small businesses for their own personal gain, right? You're starting to see some of the desperation, and when I say the desperation is, remember a couple of weeks ago when I was talking about the way that I see things unfolding, is that you're gonna see more people out on the streets rioting, looting, protesting because they're hungry and they don't have a job to go back to. So this is just the start of it, right? Now they have something to riot against, but it's not really about racial anymore. It's all about personal gains. But wait until they get hungry and stuff like that. I'll talk about that in a bit. What's really sad about these events is that the remaining business owners, right? How are they going to reopen amidst like what's already been a recession slash depression, and they didn't have like what 3 months of income, and now they're faced with this, which is everybody looting the stores, and they can potentially all the merchandise can be gone. So how are they gonna recover, right? For when you're in that, like, what about the insurance aspect of how is insurance gonna cover them at all? Like, what's gonna happen, right? And some of these like crazier stories I've seen where and this like it started off as I think you guys have seen it before, but like this is just average people getting attacked. These are just protesters attacking random people on, like, these guys are not like store owners, they're not the police, they're just random people like you and I. They're attacking them, and it's just extremely sad. what's happening. And this is San Jose, by the way. This is not like, middle of nowhere. This is right beside San Fran, right? And what's worse is that you're going to start to see some of the other the politics coming into play, where Trump is now talking about implementing martial law. And you're starting to see both aisles of the political spectrum politicizing this issue. Like for example, I'm hearing like AOC, or that Alexandra, or Diotez or whatever. She's talking about like more stimulus for people. She's wanting to make it more um, about helping these other people out. So more programs to help these people out, or even like the Donald Trump, and a lot of times where when you see this stuff happening with martial law and stuff like that, one of the things that you guys don't think about is the amount of increased government intervention in your own personal liberties, right? So do you remember, I think a couple of years ago, actually, no, it wasn't a couple of years, it was 10 years ago. Remember 9/11, right? It was only in those eras or of time where a crisis has happened that they're allowed to now do things such as they remember back there, then they had an act called the Terrorism Act, where they can actually search your place without a warrant. Go into your phone lines, tap into your phone lines, able to enter your house or enter private property and stuff like that. A lot of times, government will use these events to further increase their control of civil liberties, because normally, even in a normal state, they would never be able to do it. But when you see these things happen, they can increase things like surveillance, increase things like cell phone monitoring, or video surveillance, or even like the police stuff working to just enter your house and stuff like that. So you're gonna start to see some of those civil liberties in both Canada and U.S., and more so U.S. Erode. So that's some crazy stuff. And think about it this way, guys. I mean, if this is what is to come, think of what will happen when the stimulus checks run out, right? So, this is only $1,200 per person, and it's already been a couple months, right? And per person, and I don't know how much $1,200 can get you in the United States, right? Maybe a month or two, but once they run out, they're gonna get hungry, and when they're gonna get hungry, they're gonna try their best to do what they can. Maybe take out an extra loan or ask friends for assistance. But when you see people getting more and more desperate, and they're laid off, they don't have a job, they have a house that they can't afford. They're on almost like a foreclosure, and they have 5 mouths to feed because they have kids. And when you put a man or a woman in that situation, they become desperate. And when they become desperate, they become like something that riots, protests, violence, mugging, looting. Like, that's just typical stuff. I think that there's a general theme, and it's not just the U.S. I see that this is a lot of times happening in the world. And one thing that hits home to me is, for those of you guys, Venezuela, Argentina, Chile, France, right? Yellow Jacket, and Hong Kong as well. Like, you would think that for example, Hong Kong hits close to me, right? But everybody's focusing on the fact that the government is infringing on the rights. But I have another view, which is, I think people are just pissed off because they don't their life really sucks right now. And when I say it sucks, like even in Hong Kong, right? I'm talking about houses are super expensive. They can't afford the housing. It's hard to have a kid these days over there. Things are getting more expensive, and all their paycheck, 90% of it goes towards their house. They work like a 9 to 9 job, and they go home to a 500 square foot apartment that they can't pay for, right? So when you get desperate people, they get angry, and they're gonna riot it, but they just need a pin, right? If it's like the government doing one small thing, they're just gonna use that and it explodes. So I see that as happening. I don't know how bad it's gonna be in Canada, but I think that when you see more of these desperate measures coming to the States, it's gonna get worse. And these are Americans with guns in their house, right? So who knows how that's gonna be, but we're gonna watch it a little bit closer, because martial law is not too far away. Okay, so next thing is unemployment, of course, right? So We're now at the 40.8 mark, and this is just reported, right? So keep in mind that some of these people, they went on a computer, they couldn't log in, or they don't know how to use a computer, or they've been stuck on the phone line trying to reach somebody. Plus minus say 5% or 10%, right? The 40.8, that is unbelievable considering states has what 330 people and whatnot, and the recession was back here in 0809, which it only reached not even 1 million, right? But now you're at 40 million, so this is as bad as like the depression era almost, right? So that's where we're at for unemployment. And if you're thinking about it this way, how would businesses survive, continue moving forward, right? So that's something to think about. And I was also read this article that there's still people that still didn't get their unemployment payout. Maybe it's logistics, maybe it's like bank account error, maybe it's just some technical issues. But if 1/3 of that 40 million people still haven't got their $1,200, I have no idea what they're doing, right? Because they're getting more and more desperate, right? I mean, that's absolutely insane that they can't get anything. So think about that, right? And not just the U.S. This is Toronto, right? So I think you guys might have seen this before, where they're talking about the in Toronto even, right? They're not able to go back to work till September. So think about that for 1 second. So these businesses have not been to work for the last 3 months, and now we're expecting them to go through another 3 months till all the way to September. So obviously, I'm not sure how businesses can cope with another 3 months of no income. 3 months obviously is a bit of a stretch already, but 6 months, expect to see, businesses shut down altogether, because not only they can't survive for that long, there's a lot of instances where, like I was telling about last week, where restaurants, right? Like look at all downtown restaurants. They're usually have very, very little size of dining tables, right? So they pack everybody together, and if you do that 5 meter thing or 6 foot thing, like how many tables can you realistically do? So I don't know what that's going to look like, but obviously we'll find out soon enough, but it doesn't really look that great. On the flip side, what's the government doing? So, this is, I like to just put a chart in terms of the money supply, and this is how much, how much, on one hand, people call it money printing. I call it, these are just increasing bank reserves. So what that means is that in order for the banks to lend to each other, because there's a couple of ways that they do it. If you look at the Mike Maloney series and stuff like that, there's two ways that the Fed create money artificially. One is to do helicopter, which is, they're going to print money directly and send it out to the public, aka they're going to send you checks, send me checks, right? So, Hong Kong's did this a couple of times. So that's directly helicopter money, where they print it out of existence. They create money out of thin air and they give it to your account right away. The second one is they use primary dealers, and the primary dealers are, Goldman Sachs, JP Morgan, Morgan Stanley, and stuff like that, where they give them, or they create a allotment of money so that these institutions can do borrowing to each other, and also perform like commercial, businesses loans and stuff like that. So the reason why I want to point out it here is because look at this, in 1 month they've increased it to just $1 trillion, and that's just for 1 year. If you were to take a look at since existence back in the 1970s, they had literally, not a lot of money supply, which is great, that's deflationary. And then when you see this increase, this dip, it's like almost like a hockey stick now going straight up, right? So they're printing left, right, and center. But what I do want to talk to you about is, what are they doing with this money? And this is something net new in the last couple of weeks. And I want to point it out because, obviously they're making loans available for the banks and also themselves to buy, right? Because they're actually doing a direct ETF buying. So here's what's interesting. This is just like the M3 money supply. It really, M2 and M3 is just a difference between who they lend it to. But I just want to make the point that they're increasing like almost tenfold in terms of like $1 trillion in 1 month, which has never been done before in all of the existence of the United States. Not even the depression. So I have a chart here from Bloomberg. Actually, no, it's not from Bloomberg. This is actually directly from the Federal Reserve. I'm going to show you something really interesting here. This is directly from. This is the. I want to show in Excel because it's easier to see. On a trade level, you can tell that ever since May of 12, they've been every single day almost for about a week. I think next week's data will come. They've been buying nothing but ETFs. ETFs are index traded funds that literally you're buying government bonds, right? Or sorry, corporate bonds, right? Or corporate debt, which indirectly you're buying stocks. You own shares of the company because you're buying their debt in exchange for shares. That's how the stock market works, right? In summary, what's interesting is that another note is if you're in this camp where you're not into gold, you're not into silver, and you just really want to do stocks, one idea is just buy whatever the Fed is buying, right? So you can take a look at some of these ones, right? So some of these are actually very, very dangerous because JNK is actually junk bonds. They call it high yield. The reason why it's called high yield is because these are like, when they talk about the financial crisis back in 2008, or talk about AAA, AAA plus, AAA minus. Junk bonds are like triple B minus, triple C, all the garbage that nobody wants. And the ones that collapsed 2008 was like mortgage-backed securities, right? But these are the reason why it's called high yield is because it's extremely risky. That's why not a lot of people buying. But what's dangerous is that the Feds are directly buying these ones, which is absolutely unheard of. But I'm pretty sure that you guys can go into one of these funds and actually see what they compose of. Like, for example, short-term corporate can be like, I don't know, Boeing, JC, well, maybe not JC Penney, they're gone now, but things like, Ford or whatever, right? And if you want to take a look at what they're buying. So that's pretty interesting. And, you can tell that these are in the billions. I don't have a calculator, but you can tell it's in the trillions. It's almost 1 trillion, right? So, the short end of the story is they started buying ETFs directly from the stock market through these vehicles. They didn't buy it directly from the stock market. They used these organized ETF sponsors, like BlackRock, Vanguard, the big guys that you've heard of so much before. And a lot of the ETFs we buy like individually ourselves, right? That are controlled by these guys. So that's what's interesting. I thought that I'd like to point that out. Let me just close that one down here. Yes, corporate buyback. So remember that a couple of weeks ago I was talking about one of the reasons why our debt bubble is so high, and the companies like Boeing, instead of 11 years of good times, instead of getting those profits and actually putting into capital expenditures and paying off debt, making good on their balance sheet. Hiring more people, investing into higher equipment to do more productivity. Instead, they just bought their own shares, which basically you're paying yourself, right? If you're the CEO and you buy your own share and you own all the shares, of course your salary just went up like tenfold, right? So that's one of the biggest problems of that led to this debt bubble that we had for the last 10 years. And the interesting part is that yeah, you would think that after the March blow off in stocks, that would slow down. And in reality, it did slow down, but we're starting to see a lot of it coming back a little bit here and there. And so just be cautious. And the reason why I pointed this out is a lot of it is in IT. So when I like to, and that's why, one of the things I like to point out in terms of IT stocks is that I like to look at balance sheets, right? In terms of valuations, because if just the stock is going up, it can be, just themselves buying it, but it's not organic that the revenue is going up. The revenue can be going up by single digits, double digits, but Tesla, their stock price went up like 300, 400%, which doesn't correlate, right? So it's all a valuation kind of thing for me. So just be careful about that. And here are some of the recently announced buybacks. that these CEOs or shareholders, they're paying their shareholders basically by buying their own stock. So of course you would have seen that leading up to it, there's been every single day, of course, right, until March, and then it's just a lot less, right, because people are more scared. But you start to see some of these coming back into existence. For like I said, there's more IT here, some healthcare, industrials, and stuff like that, and it's just a chart depicting where the buybacks are going and what they're buying for and what kind of companies are buying it. So that's also noteworthy in my opinion in terms of what to look out for in the future. Now, I think that's it for the news. I want to give a little bit more news in terms of gold and stuff like that moving forward. So for those of you guys that have been looking at gold in the last couple of weeks, it's been stellar. Like especially silver. Gold is now trailing behind silver. Silver has now outperformed gold in the last 2 weeks. Broke a new high in silver. We're going to take a look at that. But one of the comments that you guys have been or maybe wondering in regards to why the gold price and the silver price is so low, and sometimes people were saying, oh yeah, it's manipulation and stuff like that. Oh yeah, the banks are playing this game and stuff like that, right? So that is also true. Part of the reason why it's been artificially suppressed is because governments don't like gold, right? When the reason why is because um, you know honest politicians don't like gold because it forces them to be honest, right? And the government can print money to infinity, and they have the complete control of that. If you were to tell them, well, why don't you do gold? They're like, no, because that means I'm out of control, right? So, I can't do what I want to do, like aka the government, right? So, anyways, part of the artificial manipulation, they were articulating that it could come from banks and hedge funds and stuff like that. And partly that's true. So you're starting to see some of those lawsuits coming in terms of the SEC looking into these allegations and getting sued, right? Some of these big banks. They're still in investigation phase. Of course, there's no details and stuff like that. But, I think a couple of weeks ago, I was talking about Scotiabank closed their metals division, right? And who knows what exactly was going on as to why they were closing. But I think after that lawsuit, the truth will come out. But one of the banks that were affected is Scotiabank, and also CIBC as well, right? There's been allegations where a lot of these banks are actually shorting gold, which is extremely foolish, and also putting a large amount of money into either shorting it or they put it into a market where they're not meant to be to experience that kind of volatility, and some of these banks got burned, right? So one of the reasons why you see like gold and silver making a comeback is because one allegation or one theory is that you're starting to see some of these banks, these major hedge funds. And when I say hedge funds, I'm talking about hundreds of millions to billions, right? Either betting against the market or whatnot. They're starting to stop doing it anymore, right? So you're starting to see that instead of like their net short, they're going more like net long, right? Because they see that it's stacked against them, right? In terms of the gold performance in the last couple of months, like starting from 2 years ago even. So that's a very interesting article that I read the other day. To just let you guys know that there is some manipulation. Be foolish not to think, but to what extent we don't know, because it's a boys club in there, right? You talk about these big elephants in the room like Goldman Sachs, JP Morgan, and those guys. Who knows how it's manipulated, but what I do know is that the physical market has not lost that manipulation. And here are some of those charts, right? So I found a chart in this is just silver, and then I was wondering what was going on with silver in the last couple of weeks as to why it spiked so high. And this is pointed here is because these are the totals of purchases of silver holdings in terms of the millions of ounces bought or imported by repositories. So these are like the bullion banks, right? So like LBNA or like these big hedge funds that hold as part of their portfolio, mutual funds that have a gold exposure like TD or whatever, ETFs, GLD, SLV, and all the ones that which is basically everyone, right? Everybody. And what I want to point out is that over the last couple of months, you've seen a dramatic increase in terms of purchasing. You see a lot of activities in here as well in terms of just like a lot of volume coming in the last couple of weeks and months in terms of silver. And also, you can tell that even historically, back from 2011, it's been spiking up like hockey stick. I like hockey sticks, right? In terms of precious metals. So the wind is at our backs for those of you guys that continue to hold gold and silver. Macro-wise, fundamental-wise, I have not changed my thesis. Things are going still very, very well in that aspect. And that's silver. Gold is no different, guys. Gold ETFs, everything, the same thing. Record purchases, no matter where you come from. ETFs, bullion banks, whatever. Gold is the same story. And it's sourced from a U.S. Census Bureau. Record imports for the U.S. as well, which is again more wind behind your back, right? In terms of, I think they're getting anxious as well in terms of their ability to pay off debt. So they've been buying left, right, center. Even the U.S. is buying. I was always thinking, China, Russia, some of these other countries, they're hoarding gold like crazy. U.S. is just the same, right? So they've been buying a lot of stuff from Canada, mints, Mexican, Swiss, and other countries. They've been importing gold left, right, and center, which is surprising in the latter parts of 2020 so far. So gold looks good. Continue to look good. I have not lost my thesis yet in terms of my my conviction. And lastly, just again, just to revisit the debt clock and whatnot. A lot of times I look at this just to see what's going on, but this is just all free information. This is just a quick chart to kind of guide you as to what's the holding in terms of, again, these are just all public data, but a lot of times China, for example, they don't like to publish it, right? So I think that China has a lot more gold than they advertise, but these are just some of the ounces that they have in holding. And these are like, you can tell it's a decreasing number. These are the availability in the open market to trade in terms of precious metals. So when you see the float, call this the available ounces market, deteriorate, you're going to see gold demand soar, right? The faster this goes down, the price goes up. It's just supply and demand, right? And another thing I like to just keep in mind in terms of what I look at is, this is a very interesting metric, which is what this test tells me is that if you were to convert all US denominated currencies like banknotes, right? So $100 bills or whatever, and you convert it and you divide it by gold, because remember, we were off of a gold standard back in the 1971, like Bretton Woods, off the gold standard, and it used to be a gold standard. It used to be one gold was about $32 US. But if you divide all the available printed money in existence today and divide it by the total amount of on earth tradable gold will be about 26,000 ounces. So will we get anywhere near this? We'll see, right? There's we just have to see how the market's going to play out. Right now I feel that we're about in a deflationary environment still, where people are not spending that much money. People are not going out to spend money. But I think what you're going to see also is that some of the inflation prices will keep coming, right? Because you've seen food last month, right? And the inflation ratio and the Canadian numbers, they start to creep up. But some of these have to do with supply and demand, right? So for example, I like to give this example where you would think that we'll be in this deflationary environment for a long time, and I would argue that inflationary is not like it's nuanced, right? So I'll give an example for like airlines, right? If I'm Air Canada and I have 2 flights going to Japan today, and there's only about occupancy 50%, right? So I would think, why would I want to do that when I can just cut one of the flights going to Japan? And at the same time, one flight going to Japan, but at the same time, I have to increase my prices so that I get the same amount of money, right? It makes sense. So on the supply side, when you see that diminishing return, you're gonna jack up prices from a supplier point of view. Don't look at it just from a demand point of view, as in, I want to buy an airline, right? Sorry, I want to go to Japan, and nobody's going to Japan, so I would expect the prices to drop. That you're looking at from demand side, but also look at the supply side as well. What would entrepreneurs do in order to keep afloat? They would have to jack prices, or else they'll go out of business. So that's why you're going to see some of these pockets. It just depends. If it's like, for example, is the inflation going to hit you in food? Is it going to be in healthcare? Is it going to be in education? Is it going to be a cost of a house? Is it going to be in the stock market? Right? Inflation is everywhere. Like stock market totally inflated. Asset prices totally inflated. Right? But your television, not so much. Right? It's been pretty good, right? So it just depends on what it is. So, we'll see in the next couple of weeks how that's going to hit, or if there's more inflation going on. And the last one is, this is the total amount of debt that's going on right now. And what I really want to show you is there's no turning back. And the reason why I want to point out why this is so bad is, we are right now running at a 0 point. Let's just pretend it's 0% interest rate, right? So at 0% interest rate, look at this number. Imagine if this is the total amount of tax that they can generate in terms of income. And I want to show you this number, which is the total amount of interest that the government owns. Look at this number. If it was 0% as of right now, they can't even cover interest. What do you think is going to happen if things, miraculously gets better and they're going to be like, we're going to increase the rates? This will go up, right? Because it's going from 0 to 1%, 2%. Let's pretend it's 10%. How is the revenue going to keep up, right? So basically what I'm trying to say is they're insolvent. US is right now insolvent, right? Which is absolutely crazy, right? But it kind of goes to show that the more knowledge you have, the more understanding you have on how this game is played, the more you understand what they're trying to do. What they're trying to do is they're basically trying to inflate the debt away by continue to issue more debt. It's kind of like, all right now the debt is 25, I don't know, I can't even count, like $2 trillion. If I print $25 trillion of existence, then I can pay that $25 trillion, right? Theoretically, because I have an unlimited money machine, right? But again, the real cost is your dollar. And when that crashes, that's when it's the end game. But right now they can continue to do it. But again, this is a big, gigantic, enormous economy system that there's many levers, right? And they're just trying to just get afloat by printing. So we'll see what happens. And that's about it, guys. Any questions about everything that I talked about today? Lines are open.
Hey, Victor, it's Mark. Question: you were talking about the two ways they create money or currency in the States. Where are we getting our money from? Sorry, our currency from in Canada?
It's the same thing, right? So I'm gonna give you one of the best shows I've seen was from George Gammon and how he explains it. I'm gonna show it to you. Hold on, this guy explains it really well. But basically, I'm going to show it to you afterwards. One of these videos, but in Canada, it's the same thing, right? You have the Bank of Canada, right? And you have the government, right? If I were to kind of use the same analogy, which is the bank. Sorry, did you look at the Mike Maloney's 10?
Yeah.
There was one episode, and he articulated way better than I did. What I would ever do, which is like the treasuries, right? They issued a debt, they asked the Fed to print it, and they basically cancel each other out. That's how they create money, right? But what George Gammon goes through is when they create money, there's two ways it reaches the audience. And when I say audience, I'm not talking about you and me, because you and me is the real economy. And then there's the financial economy. A financial economy is like hedge funds, the banks, Goldman Sachs, those guys, because let's talk about the consumer first, right? How does money reach you is when there's two ways, right? You either they print money directly into your pocket, aka they issue checks to you. It's that simple. Just like the SERP, right? They print you directly, like no issues, no whatever. And then the other way is that they increase bank reserves, right? And what that means is they basically print or issue assets in the asset side of the banks. But in order for you to in order for the banks to create money, you have to issue a loan. You can't just go to a bank and ask for money out of nowhere, right? By you asking for a loan, aka if it's a business loan or a car loan, you create the other side of the liability at the A&L, right? So the asset, they have like $1 million, but unless you ask for a $1 million in a business loan, then they cancel. Then they give you the cash, but then your liability becomes their asset, right? Like aka you owe them like $1 million now, right? So the whole mechanism, I'm gonna forward you a link for it. This guy explains it way better than I do. But there's two ways of it. One is the financial asset side, and one is the real economy side.
Okay, thank you.
Yeah. Any other questions? If not, then I will get into some of the charting to end the session today. Let me know, guys, if there are any questions. So how are we doing today for you guys that have been in gold and silver? You guys have, gold and silver have been, gold has been relatively the same in the last 2 weeks, but silver has been on a tier, so which is great. Maybe I'll start with S&P, right? Everybody can still see my screen, hopefully. So S&P, it's just magic, or whatever you want to call it. It's just nonstop higher highs, higher lows. It has not taken a break, actually. In fact, the next resistance is literally the first kind of sell off before. Sorry, the first attempt at going back to all-time highs back in like March. So that's at the 31.43. That's the resistance. But you can tell on the daily, it's been strong. Like, in fact, there has been no stoppage. Like, usually I would see higher highs, higher lows, but no, it's been from here, just went straight up. It didn't even take a break. Like, it did for a while, but it just continued on. Like on the daily, on the hourly, same thing. On the 4 hourly, same thing, right? So what I would envision the S&P is going to happen is that most likely it'll just continue to keep going, and then and then when it hits it, it's going to come back, and it has to retest, right? So most likely the next level of support is this really nice long chart. So what I would expect here, and then it's going to test again, right? So it can continue to test, and it's either going to shoot up into all-time highs. The next one is really like all-time highs, which is, again, just absolutely bonkers, right? Or it'll just go down, right? But on the daily chart, the reason why I marked this line here is because daily downtrend, because that was the last daily high. So what that means is that from here, the S&P has this much room to work with and still be in a bullish daily candle or daily uptrend. Like, then that's why it has so much strength. So S&P, again, I don't understand it. I don't understand the market. It can sometimes work against you, even though all the facts out there, the riots, the unemployment, the fact that their president is a douchebag or whatever, right? It just, nothing makes sense, but the market doesn't care. I think what the market cares about is, am I going to get the next level of stimulus? Is the Fed's going to print more money so I can buy more stocks? And that's all they care about. So they completely ignored the unemployment. They completely ignored the earnings that are now coming into play since March, and they've been bad. Every single like blue chip company, it's been bad, right? But nobody cares. Nobody looks at that stuff anymore. They don't care about the riots. They don't care if there's blood on the streets. They don't care there's 40 cities on curfew. They don't care about the fact that restaurants and small business are going to close. Nobody cares, and they're just going to keep buying. So when is that? When is it going to stop? It stops when it stops. Nobody knows, right? But I'm still, my fundamentals is telling me, these are the kind of cases where I'm at conflict, right? Because the fundamental side of me tells me this is, I should short it. But at the same time, the charts are telling me don't short it, right? So that's why I have both. I have longs and I have shorts at the same time, because I just can't make, I can't make a prediction, right? It's just too whatever, right? On the dollar, great, but dollar, very, very notable, notable pattern here. Why? Because if you were to take a look at from here to here, it's been on a trading range, right? And a trading range being the low of here, the high here, and then it got tighter. here, here, tighter, tighter, tighter. And this was back in March, right? So from 3 months straight, the dollar has been, you know, in a trading range, and breaking down and also having a follow through. It didn't just drop down, went back up. It fell down and continued to go down. And this is on the daily, by the way. If I were to just go down a little bit tighter, you can see that it's a stair step pattern, right? So that tells me that, you know, there's follow through. The market's telling me that it's a weaker dollar, and which is great, right? When there's weaker dollar, gold goes up, right? Usually, right? Like I was saying before, dollar weakness on dollar on king dollar on one side, and then all your basket of currencies, right? Doesn't matter, euro, Japanese yen, British pound, gold. Gold rises against everyone, right? Um, think about it this way: gold has no counterparty risk, but US's counterparty risk is like euro, like aka they go up and down in proportion with each other. It's like they're both fluid in nature, they're flexible in nature, but gold has no counterparty risk. So it depends on what you want to play. But what I do want to see is the dollar getting weaker and weaker, and the next big support is you're looking at around here, which is now around, I don't know, like $4 or $3, but on the dollar, that's substantial. So, you know, if you wanted to short it, this was your entry point, right? And your stop loss would be a little bit higher, but you would have ride all the way down, right? But who knows? But it doesn't matter. It doesn't matter if you don't play the dollar, because if you play gold, you're inadvertently you're playing the dollar at the same time. So I like seeing that. What I'm hoping, what I'm expecting, or yeah, what I'm hoping to see is it's going to continue to go downward. Oh, sorry, sorry guys. Let's move the chart over here. What I'm hoping to see is more continuation of a downward movement, like something like this, and then here it's going to do something, right? So it most likely won't break upon the first one, or again, it might just go up, go into equilibrium, and then change its direction. We'll see, right? But the reason why I say this is so strong is because that's the next strongest support since March, right? But anyway, we'll see. On the gold. So gold has, let me just start off with on the dailies. So on the dailies, you can tell that it's been in a it's recently broke a higher low, but then it's now kind of back into this testing range between here and here. The gold in the 4-hourly has broke through, so this is significant because it's telling me that it's looking to either change direction, because you know, you can tell from the last 4 hours, a couple of 4 hours ago, it's on a higher high, higher low, and usually when it goes to a certain high range, it either stays in an equilibrium being between these two channels, or breaks off, right? So it's breaking off of this support, and the next line I would look at is just back in its old support line, which is like a 1726. It looks like it's found another. It broke below that, and it's now finding a little bit of a bottom here. So right now, I would just wait and see what gold does, because right now it's kind of not sure where it's going. It's trying to find its way. Now, this silver, but with that being said, I wouldn't be surprised if it sells off, guys. I mean, like gold has been ripping for the last like couple of weeks. So a little bit of consolidation, a little bit of pullback is definitely, you know, just normal, right? So where would it break? Major support, the first one will be right here, back to 1691. If it gets there, we'll see. And then, you know, something even more major will be like 1672. It just really depends how strong this pullback is. But the reason why I highlighted the US dollar is because that is also the tailwind, which is, you know, if the US dollar was rising, this would just go down like a lot faster. But if the US dollar is also tanking, then it would give a little bit more breath into holding its own, right? Now, let's take a look at silver here. You can tell that in the last couple of weeks went up. Let's take a look at the dailies here. it's been pretty good strength ever since May 19th, which is when we talked about it, and it went up at least a couple of percents. On the 4-hour, and the reason why I put up 4-hour, actually, let's go to 1 hour. It'll be a lot more little evidence. Went up, and then you can tell that it's been a trading equilibrium, right? So it's just figuring out where it's going to go next, and then it decided to, I think today, went down. Now, what's interesting is one of the if you were the technical analysis and doing some of this like this, this is where an example of closing the gap, right? So you notice that on May 20th, it just gapped up. It just missed like this little continuation. So anytime you see it gaps up or gaps down, it usually signals that it'll always try to close the gap. And today it did that, right? It closed the gap as in it connected this big portion to this. So it went down, connected the dots, and then went back up. So you can tell that it's trying to fight this. It went down below its equilibrium, and now it's trying to fight. So it looks like it's losing strength as well. So most likely what's going to happen is it's going to retest this because it's made the bottom in the hourly. So it's going to test between if you're bullish, then it'll continue to test this and another equilibrium, but if you need a lot more strength to break this or break this, right? So that's why I think silver's taking a break. So short term, I think it needs to pull back. Long term, it doesn't matter. Like, my long term is like next year, so I don't really care. So, but short term, I would say that it's going to pull back a little bit or consolidate. If you were to take a look at it, this is a weak support because there's only one line. Most likely, if it continues to fall through, just break, right? Or it would just break, right? Lower highs, lower lows, lower highs, lower lows, breaks through, and then the next support, to be honest, would be here, back in the 1756 range. So that's the level I would take a look at for next support if this breaks through. So if you want to, if again, you have to play, you have to figure out whether or not you want to play bullish, right, or bearish, right? So, your entry, if you were to play the bearish case, would be obviously this line because that was the line in the sand for in terms of channel. You would do an entry here for a short, and then your stop loss like right here, catch it through, and we'll see what happens, right? Because this is very weak. So if you want to do if you want to gamble a little bit and you want to catch on the high, I would just buy along right here, put a loss, and then see what happens. But it's a very weak support. So this one's a lot stronger because 1, 2, 3, 4. I would do a buy order here if you want to look to get in back to silver. But again, just depends on how much capital you have and also your time frame. So that's about it for today. Any other questions about technicals or news or? Just stop recording here.